Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Thursday, August 1st, 2013. Well, a very large black body candle today that's made a lower high and a lower low, confirming continuation of that trend to the downside that was established 3 trading periods ago with a spinning top type candle with a lower high and a lower low. For the previous couple of trading days, we had outside days suggesting that the trend that to the downside may have been in trouble, but certainly today continuation of that trend has been confirmed. We have seen a very large black body candle develop for today's trading, and it has been quite some time since we've seen a black body of that size, and this does suggest that there may have been a substantial change in sentiment in this market. With this mixture of small black bodies and strong white bodies in this second time frame uptrend, it does suggest that the sellers are now strong, whereas they were really showing no strength in that previous uptrend, and now the solid bearish close down around the low has suggested that the sellers have closed with control. And the large black body suggests that the sellers have made a substantial amount of net bearish progress on the day between the open and the close, and thus a substantial amount of momentum to the downside here. The one thing to watch out for here is the interaction with the area of previous resistance, which is now support at the 131.96 level, and that has held as support again for today's trading, and as the trade develops for tomorrow's trading, it is still acting as support. We have tested down below there, but it is an area that is crucial to this market if it is going to continue lower. If the market does continue lower, we do have strong potential support at the top of the cloud down around the 131.60 level, so we do need to watch that. But at the moment the market is failing to close down below that 131.96 level, and is crucial. For today's trading also, we saw the market testing to the top of that highlighted yellow zone that has been tested many times in the recent past, with the market failing to close up above there, so that will provide very, very solid resistance to the market, as will the area just above there at 133.20. Now, in terms of the Fibonacci extension, we're examining the relationship of this first time frame downtrend to the previous time the market is trending down, and previously we saw rejection from the 78.6% level. Today, once again rejected from below there, and the market's failed to close down below there, but certainly with this type of candle it does suggest that this market is destined to trade to lower levels. We're seeing no strength from the buyers here. The sellers have totally dominated today's trading, and already today we've seen the market test to the 100% level, but we have seen rejection from there, so we may see the continuation of the trend to the downside. But if we see buyers coming back into this market, it could signal that there is a possibility of a change of trend to the upside. In terms of the Fibonacci retracement for this technique, in line with the previous day's trading, we saw the market testing to the 38.2% level. For today's trading, we failed to close down below there. We've extended down below there and been rejected from there. We are already seeing the market trading down below there and testing almost to the 50% level. So the 50% level at 131.81 is crucial. The 61.8% coincides roughly with the top of the cloud at the 131.54 level, so that will provide very, very solid support down around that area. But we do need to watch how the market develops over the next trading day, and we're already seeing rejection from around the 50% level at the moment. In terms of patterns, and this megaphone type pattern or inverse triangle pattern is becoming wider and wider, and it is a very difficult pattern to trade, because the thing is, if we do see a breakout to the upside, we don't know whether that's just another peak within the pattern or a breakout to the downside is another trough in the pattern, so difficult to trade. But what we're seeing here is volatile trading, and that's usually the sign of a top, so let's be aware of that, and there is a possibility of the market trading lower here. As I've already mentioned, we do have strong support down below where the market's trading, so a breakout down below may be limited. In terms of Ichimoku, obviously the market is maintaining a bullish bias in the long-term time frame by trading up above the cloud. We saw the bullish breakout up above, and then the cloud acting as an area of support, so that still is a possibility moving forward, a very, very strong possibility over the next week or two. In terms of the Kijun-sen, the market is trading above the Kijun-sen still, so we have a bullish market in that medium-term time frame, but that Kijun-sen is pointing flat. Price action tends to be attracted back towards a flat Kijun-sen, and that's what we're seeing at the moment. But now, today, we've had a solid bearish close down below the Tenkan-sen, and it's been some time since we've seen that, so it's giving us a bearish market in that short-term time frame. And previously, the Tenkan-sen had acted as an area of support, so there may be a strong change of sentiment and may herald the market trading lower. As I've already mentioned, however, the barriers to this market trading lower are the very solid support down below where the market's currently trading. But we do have very, very strong resistance above where the market's trading at the moment, extending up to the 133.20 level. So a difficult market to trade. What we need is a clear breakout in either direction, and that would be the market trading in a bearish manner down below the bottom of the cloud, although we do have to be aware of the market breaking out of a flat part of the cloud, but certainly also breaking out and closing up above the 133.20 level. But it's not likely that we will see that type of trading activity very soon. We do need to be patient, wait for a clear trend in this market to develop.